Internet Capital Markets, the weekly show where we explore how financial systems are being rebuilt on the web. Each week, we sit down with the builders, investors, and institutional leaders shaping this transformation. From tokenized assets to decentralized finance, stablecoins, RWA, and everything in between. Today's show is brought to you by CopyBetter, the smart aggregator for prediction markets. Copy, bet, win. Before we introduce our guest, I'd like to welcome my co-founder and co-host,
everybody.
We actually have a super interesting guest today. And if you remember our show with DFNS, the CEO Clarice actually suggested to invite Kevin. And Kevin is the CEO of in health tech, fintech, pioneering stablecoin solutions, emphasizing compliance, scalability, and decentralized payments. Prior to that, he served as the technical co-founder and CPO of Fortress, developing stable in 2016. Yeah, it's that old. And as a CPO at Prime Trust, and where there he helped to launch the first US-based, fully reserved stablecoin for RWA, and built the payments stack for Binance US, OKX US, Bittrex, MoonPay, and so many more. So he's an advocate for regulatory clarity, financial inclusion, and driven by personal Bitcoin purchase rejection that sparked his blockchain passion. We need to talk about that. Neutral networks like Borderless to enable builders and enterprises to use stablecoins to build the next generation of fintech. Welcome, Kevin.
Thank you. What an intro. Somebody the other day introduced
No, next time. Good. We actually met in Cannes as well. So we have some common history here. But for those who don't know you
yet, I got into blockchain personally because of the concept of peer-to-peer electronic cash. That was kind of my blockchain moment back in the day. And back in 2016, 2017, DC existed. And then we also did like True CAD, True GBP, True Euro, True AUD. There may have been a few others, which was the first kind of basket of fiat currencies on chain, which was super exciting. And then did like the first stablecoin as a service issuance platform, which is obviously now very hot. Coins, you didn't have the interest from the PSPs, things of that nature. So then kind of the only thing to do was to pivot into payments infrastructure for exchanges, which was profitable, but was very much about the speculation personal core thesis. So I'm glad to be that stablecoins are now taking off. And I've spent the last 8 of the 10 years working at regulated US and the usage of stablecoins for cross-border transactions, right? And kind of the ability to use stablecoins as the is you have a global asset, a stable coin on a blockchain, and you have local fragmentation, meaning banking rails, fiat currencies, regulatory licenses, and that's a strong narrative. I don't think you're going to see central banks say, you know what, we're going to abandon our currency and we're going to dollarize our entire foundational economy. And obviously banking rails aren't changing really anytime soon. So there's a lot of people trying to build at the intersection of this, which is what we do. And we've always had kind of this mission and for Borderless, it's all about bringing everything together into a single platform. And that sits on top of what we call the Borderless network. So if you're a financial institution, a PSP, a that exists around the world. And the analogy we like to use is, imagine if banks had to integrate the APIs of every other bank they ever wanted to transact with. That's obviously not scalable. In the traditional world, we have networks, we have standards, and that's what Borderless has created, where if you want to operate across, different continents instead of etc., you just connect to the Borderless network. And the Borderless network is already connected to, a dozen plus and growing quickly of the leading stablecoin liquidity and on and off ramp providers around the world, which lets you do all these different transactions globally from a single place. Of last year. So that's, the product's now a year old. And we created the category of stablecoin payments networks. When we launched this, people were like, what is this? Is it a blockchain? Is it a new stablecoin? What are you doing? And then, 6 months later, Circle launches CP in a few months. Was Borderless with this crazy concept. Now it's been validated by Circle copying, Fireblocks coming in, etc.
We really well made progress in just 1 year. So
Thank you.
A few things actually that it's kind of depend on fast global settlement. And what are the kind of 1 or 2 key things why traditional payment rails are fundamentally incompatible with that vision?
I think it's incredibly market specific right now, and I think that's a point that we try to make very often. If you're trying to move money from the US to the EU, you honestly if you're like, a JPM sending money to a Deutsche or something like that, like that's a 10-minute process. You can do end of the day settlements. You have credit lines between you, like completely solved problem. USD and Euro is one of the but that breaks down in 2 scenarios. It breaks down partially between emerging markets and traditional markets. So this is where you see a lot of activity in like US to LATAM. So what happens is you have a bank that needs to go to a kind of correspondent or intermediary bank. That's the SWIFT member. That bank then sends it to another bank, which is a SWIFT member, but then acts as a correspondent or intermediary for the 4th bank. And all of a sudden, so if you have a currency that can fluctuate by 5% a day, having payments in flight for multiple days is massively, massively risky. And I think, this has been a template. And they create the illusion of instantaneous payments by basically maintaining this liquidity and treasury in all these different banks and regions across the world. And they use these like pre-funded account model to say, okay, while the payment's not instantaneous payment. And while that helps from a time perspective, it doesn't necessarily help all that much from a cost perspective, because now you have the cost of capital of going and deploying all this pre-funding. So I think the great and they would borrow over weekends. They would take a $300 million line of credit, because that's the amount of pre-funding that they had to go and deploy in all these different accounts around the world. Because stablecoin-based treasury, and you have local on and off ramps, now I can hold a balance that I can deploy across the world in real time 24/7. And cost savings. So when people say, okay, payments are fast, things like that, you know, the speed does have a direct correlation to cost. And that creates rates. And people say, okay, well, how can stablecoins be cheaper? I can go look at the FX prices, and stablecoins are trading at a premium. Completely correct. Stablecoin-based remittances are cheaper, and stablecoins trade at a price premium. Those can both be correct at the same time. You need to kind of understand deeper and realize, okay, well, if I'm saving 20 basis points of cost of capital, then stablecoins can trade at a 10 basis point price premium, and I still have a 50% cost reduction.
US and Europe basically solved. I would argue it's also solved between like the entire whale from US, Europe until like Singapore, like this epic region. But then it's like right.
Yes.
Even though they try to automate everything, you definitely have like this huge overhead of just reconciling all the time. Is in the beginning, it's like a station network, blockchain. So maybe you can dive into that. Like, what are people or like institutions dealing with when they use borderless, when they want to use borderless?
The point is there's already a very, very crowded market of different chains that are solving for the underlying kind of decentralized money movement mechanism. We also think that decide I'm going to become a stablecoin issuer now, right? Like there's maybe some validity, and I'm actually quite bullish on the issuance infrastructure, right? We've got some really interesting folks doing things there. Little seed stage startup anymore, not interesting in creating some sort of new stablecoin. But what's been missing is this way to bring all of this fragmented liquidity from all these regulated entity with a license in the US, let's say, right? So I can go and I can mint and redeem stablecoins in the US very easily. I have access to let's call it BRL or Nigerian Naira or South African ZAR or something like that, and who has access to local banking rails. And if I'm going to or as a PSP or as a fintech across 50, 60 different countries, it's not viable for me to go and integrate 50 or 60 different APIs into my own vendor stack. That's incredibly interesting to then productize and offer as a network. And use that network to do local collections, local off-ramping, and then complement the rails that I have. So someone can say, okay, I'm going to on-ramp, and then I'm going to settle to counterparty A, and then counterparty A is going to off-ramp and send the local fiat rails. And what interestingly this real-time connectivity, real-time rails, meaning you might have connection to Instant SEPA. A recipient in Brazil may have connection to PIX. Instant SEPA is real-time, PIX is real-time, but Instant SEPA can't settle to PIX. So stablecoins create a real-time bridge that can
Oh, that's really a good summary of things. So you mentioned also earlier that you launched last year in January, and 2025 was probably the year stablecoins. This real-time connectivity. How do you see the evolvement until the end of the year? How will 2026 look like then?
I think you had two inflection points. You had what I would call like business capital inflection point. Larger enterprise markets, that stablecoin infrastructure is legitimately interesting, is getting real traction, and is moving out of this, and I include myself in this category, weird for stablecoin infrastructure. That's a massive signal to other payments companies. And that's also a massive signal to VCs and other investors, which has now created this flood of capital. Persecuted, if you will, right? You had Operation Choke Point 2.0. You had kind of the government trying to use banks to clamp down on getting crypto out of the banking system, whether it be exchanges, stablecoins, etc. Unlocked, which has now allowed stablecoin issuance to start to take off. So you have this combination of the business and capital side and the regulatory unlock, and that's what's driving so much growth. In a lot of kind of larger Visa is one of the world's largest payments networks, can now be funded with stablecoins. We're in January. Let's see what everybody else does this year.
It's going to be exciting. So
$2025, what's our strategy? How do we think about this? 2026, how do we get a POC to market and validate these assumptions and kind of figure out what we don't know that we don't know? Announce the blockchain component to their network. It's going to be a lot of POCs this year, and then a massive amount of mainstream adoption next year.
Yeah. Another big news that stood out to me was like the partnership. So like we see that on the institutional side, on the retail side. So it's like really a fun time to be in the industry. But maybe back a little bit to your background. Did you learn, like, where did you see the gap? And then maybe as a final part of the question, where do you differentiate like from the other payment networks you mentioned, like the Fireblock?
Important parts of Borderless. When we think about building a network of stablecoin companies, we really look to connect the leading companies in all the different markets into a single place. And the way that most, and their roadmap, it's about geographic expansion. And geographic expansion falls into two buckets. One is where are the core corridors and what are going to be the core markets. So obviously for Bridge, that's US. So that's Yellow Card, that's Africa, et cetera, et cetera. And in those core markets, what they want to do is they want to fully own an integrated stack. So they want to have a license. That long tail of countries, it's not commercially viable to go from time or capital perspective to go and get licensed in every single country around the world, to go and get direct banking relationships in every single country around the world. So the way that they extend out is by using a network of already built integrations and already has the leading stablecoin companies that you would want strategic alliances with all in the same platform, which is Borderless. So as you look to the rocket fuel on this expansion strategy that says, okay, now instead of being constrained by engineering resources, product resources, having this constantly accruing overhead that every time I connect become more and more expensive, which means your growth kind of reaches this natural asymptote where adding one more provider becomes harder and harder and harder and harder. Instead, these companies connect to Borderless. Borderless gives them all the leading stablecoin providers around the world. As CPN being one, obviously the Fireblocks network for payments being the other. What has always really mattered to me is credible neutrality. So we believe that this network layer connects. There's not. So as we have an expansionary market under Genius, is Circle going to promote Tether over USDC? Is Circle going to promote Sony stablecoin over USDC? Are they going to promote Self stablecoin? Of course not. This is means CPN becomes just another fragmented rail with blockchain lipstick. What you need is an actually credibly neutral network like Borderless that doesn't have any of these hidden incentives or a hidden agenda behind the scenes that can say, sure, et cetera, et cetera. And all that liquidity is actually in one place. Because if you have to say, okay, I want to support 10 tokens, let me go integrate 10 different networks. We've lost the plot here completely, right? The interoperability is supposed to be, raising massive valuations from VCs. And we think about, all the other networks in very much the same way. So if you can only connect to other Fireblocks customers, does that mean that you can actually connect to the leading stablecoin companies around the world? Does that
really combine all the ecosystems, right? And that users don't need to decide like, am I only allowed in short, like go through like one workflow, like when is like Borderless coming in? What are the services that you provide with
between, we'll pick the US and Brazil as just like an example corridor. So on the network, we think of it as originator is some sort of a regulated entity. Actually, not auto. Let's stick to bank and trust companies. So there's a financial institution. They have their own liquidity in the US. So they have customers with account balances. They have access to a CH wire. That's a very typical aggregation model where you connect to an aggregator. The aggregator resells and aggregates liquidity from a bunch of different places. You don't know where it's coming from. You don't know who's ultimately selling you that liquidity. You have no diligence. As a network. So as this company, I'm going to sign up to be an originator on Borderless. Then I'm going to look at the participants that are on the Borderless network. And I'm going to choose the ones that I'm comfortable transacting. Let's focus on Brazil. So I want to enable a Trace Finance. I want to enable an Avenia. I want to enable Bitso. Like these are the counterparties that I'm okay to transact with. And ideally, you want to enable more than one. And I have this USDC, and I need to go deliver it to this bank account in BRL using Pix. Show me the real-time prices across the providers I've enabled. Now, all of a sudden, you can see what the FX rates look like for USDC BRL across these different venues. And you start to get into a concept of best execution. And now you have a competitive environment around rates. And you then look at those prices that come back and you can say, okay, in this case, the PIX information, Borderless says, okay, great. I'm going to go communicate on your behalf to Trace Finance. Trace Finance, this is the incoming settlement amount. This is the destination it has to be. And this is kind of the orchestration component of the platform. And then Borderless returns to the originator, in this case, the bank, a settlement address. And Borderless says, great. If you send your stablecoins here, it will then end in this. The funds are converted to BRL and then sent out over PIX, the destination bank account. And you can now imagine this process repeated across a bunch of different countries where the bank goes, okay, great. I have this USDC to go. For me, you settle directly with the off-ramp provider. Same happens in now 70 different countries around the world. And the value of Borderless isn't this one value.
That breaks it down so clearly. Thank you for walking us through that example. And we actually would love to one question, and you have one word each to answer.
One word. Okay. Let's do it.
All right, let's go. The most overrated narrative in stablecoins today.
Regulation.
One thing banks underestimate about crypto whales.
Counterparty risk. Better.
Now I give you one sentence to answer. Looking 5 to 10 years ahead, what will feel borderless and seamless?
I was going to say borderless, but I figured that was too obvious of a plug, so I went with seamless.
Super.
We're on Borderless.xyz. There's so much vaporware and other nonsense in the payments industry that we're big believers in both credible neutrality and transparency. So doing some really interesting things on the issuance front.
Would be an interesting episode as well. Thank you so much. That wraps up this week's episode of Internet Capital Markets. Huge rate and share the show. It helps us to bring more conversations with the people actually shaping the future of on-chain finance. This is Internet Capital Markets. Please join us next week. Until then, stay curious, stay connected, and keep building the future of